Hey everyone, and welcome back. I know many of you out there are probably wondering how this upcoming U.S. election might impact your investments,
Yeah, for sure.
especially with all the market activity that we've seen lately. It's a pretty interesting situation right now, to say the least. Wall Street seems to be betting big on a Trump victory, and today we're going to explore why.
We've got some fascinating insights to unpack.
Yeah, we've got some really interesting data from some major players in finance like Goldman Sachs, JPMorgan, and Deutsche Bank.
And what's really interesting here is this isn't just speculation. We have some data suggesting this trend.
Okay.
Goldman Sachs, for example, they have these curated stock portfolios that they call election baskets. And their Republican victory basket is soaring right now. It's hitting all-time highs, while the Democrat victory basket is lagging behind at levels we saw during Biden's term.
So it sounds like Wall Street's putting their money where their mouth is. But the question is why? Why this Trump trade? Is it just blind faith, or is there some method to this madness?
Well, it's important to understand that this isn't really about endorsing a particular candidate. It's more about analyzing, the potential market reactions to different outcomes.
I see.
Do you remember 538, the election forecasting website?
Yeah, of course.
Their data suggests that while Harris might be ahead in the popular vote right now, Trump could actually have an advantage in the Electoral College.
Ah, the Electoral College. That system where the person who gets the most votes doesn't automatically win.
Precisely. And that's ultimately what decides the next president.
Right.
538's model currently gives Trump a slight edge, around 2% in the Electoral College, projecting him to win 4 out of the 7 key swing states: Pennsylvania, North Carolina, Georgia, and Arizona.
Okay, so those swing states are super important. But what's driving 538's prediction toward a potential Trump win?
Well, their model looks at a ton of different factors, but 2 of the big issues that seem to be working against the Democrats right now are the economy and immigration. A lot of voters are feeling the pinch of inflation right now, and historically, voters tend to hold the incumbent party accountable when times are tough.
I mean, if you're feeling the squeeze, you're more likely to vote for change.
Exactly, and that sentiment is really fueling this Trump trade. Goldman Sachs predicts that a Republican sweep, winning the presidency and both houses of Congress, could actually trigger rising interest rates and a short-term boost for risk assets like stocks.
Okay, wait, hold on. Let's break that down for a second. Why would a Republican sweep lead to those specific changes?
Sure, it boils down to market expectations. A Republican-led government is often associated with policies like tax cuts and deregulation. And these types of moves typically stimulate the economy, at least for a little while, making investors more willing to take risks, which pushes up stock prices.
That makes sense.
Yeah.
But, elections can be unpredictable. What if Harris wins but faces a divided Congress? What happens then?
That's a really good question, and it definitely introduces a lot of uncertainty into the mix. In that scenario, Goldman Sachs anticipates a potential short-term weakening of stocks. With a divided Congress, passing major legislation becomes much more difficult,
Yeah.
which often leads investors in a kind of wait-and-see mode, and that can lead to hesitation when it comes to investing.
So a divided government equals a hesitant market. Interesting. Now, we've talked a lot about Goldman Sachs, but they're not the only ones observing this trend. JPMorgan, another huge player in finance, they're reporting that hedge funds, those big-time investors, are also leaning towards assets that align with a potential Republican victory.
Right, and to further solidify this trend, they're also selling off renewable energy assets, which are more often linked to Democrat policies. So it seems like a lot of savvy investors are anticipating a Republican win here.
It's like they're trying to predict the future by looking at, current trends.
Exactly, and Deutsche Bank's analysis actually adds another layer to this whole thing. They're suggesting that the current market rise might not be solely due to election predictions. It could also be tied to actual earnings growth in companies.
So the market might already be pricing in a Trump win, and if he does win, the potential for any significant stock increases might be limited.
Precisely. They're cautioning that if the market has already kind of factored in a Trump victory, the gains from that outcome might be less than anticipated.
So for those of you listening out there, what does all this mean for you? Well, Wall Street seems to be leaning towards a Trump win based on a number of factors: the Electoral College map, voter concerns about the economy, and those anticipated Republican policies. But it's not a guarantee, and even if Trump does win, the market may have already adjusted, potentially limiting further gains.
Right. The important thing is that understanding these trends and different viewpoints can help you make more informed decisions about your own investments, regardless of who wins.
Absolutely.
Hmm.
Now let's zoom in on the tech sector. As you know, it plays a significant role in the market and likely in your own portfolio.
Yeah, the tech sector is always interesting, especially during an election year. A report from Bank of America breaks down how different election outcomes could potentially impact tech companies,
Yeah.
outlining 4 possible scenarios.
All right, let's dive into those scenarios then. What might happen to tech companies if Harris wins, but Congress remains divided?
Well, in that scenario, Bank of America predicts a bit of a mixed bag for tech. Social media giants like Meta and Snap could actually benefit from a potential nationwide TikTok ban under a Harris administration,
Interesting.
eliminating a major competitor. But at the same time, big tech companies like Google, Meta, and Amazon would likely face continued antitrust pressure from the Department of Justice.
Hmm.
However, a divided Congress might make it pretty difficult to pass any significant legislation actually targeting them.
So some tech companies could win and others could face some challenges.
Exactly.
What if the Democrats take both the presidency and Congress? How would that impact the tech landscape?
That outcome could lead to much more intense antitrust scrutiny for big tech, potentially even with new legislation similar to the EU's Digital Markets Act.
Right.
This act is designed to limit the power of those tech giants, so it could be a real game changer. But even with increased antitrust pressure, Meta and Snap could still benefit from that potential TikTok ban.
So the stakes get higher with a Democrat sweep.
For sure.
But what about the gig economy companies, the Ubers and Lyfts of the world? How would they fare in this scenario?
A Democratic sweep could bring some significant changes to labor laws, potentially requiring these companies to classify their drivers as employees rather than independent contractors, which would be a huge shift for their business model and could definitely impact their profitability.
Yeah, it sounds like a Democratic sweep could really shake things up for the tech industry.
Yeah.
Now let's flip the script and say Trump wins, but faces a divided Congress. Yeah. What happens then?
Well, in that case, Bank of America anticipates potential changes to tariffs, which could be really good news for domestic e-commerce companies like Amazon.
Okay.
The pressure on big tech from antitrust regulators might also ease a bit, except perhaps for Google, which has faced those accusations of bias against conservatives.
Right.
And gig economic companies like Uber and Lyft would likely see a continuation of those more relaxed regulations that they've enjoyed recently.
So a potential breather for some parts of the tech industry, but maybe not all.
Right.
Let's explore the last scenario. What happens if we get a full Republican sweep?
Okay, that scenario could bring the most significant changes. Tax cuts would become much more likely, and the expectation of a stronger economy could boost tech stocks overall. However, those increased tariffs that we talked about could benefit domestic e-commerce while hurting Chinese tech companies like TikTok and Sin.
Right.
And this, in turn, could potentially impact the advertising revenue of companies like Google and Meta.
Wow, a lot of potential twists and turns depending on how the election shakes out.
Yeah.
It really highlights how interconnected politics and the market are,
Absolutely.
and how decisions made in Washington can really ripple through your portfolio.
It's true.
It's crucial to be aware of these potential scenarios and think about how your own investments might be affected.
For sure. Think about the companies we mentioned. Do you own stock in any of them? That's something to consider.
Yeah, it's a good reminder to really review your portfolio and think about your risk tolerance.
Definitely.
Now let's shift gears a bit to a different kind of election gamble,
Okay.
one that's been grabbing headlines and sparking a lot of debate. Let's talk about Elon Musk's $1 million voter giveaway.
Oh, yeah, this is a really interesting one.
It's certainly an unconventional approach.
It is. Musk announced he would randomly give away $1 million to registered voters in those key swing states. But there's a catch.
There's always a catch with Elon Musk, right? What's the catch this time?
Well, to be eligible, voters have to sign a petition supporting free speech and gun rights, key issues for Musk's America, and prove that they are registered to vote in one of those swing states.
So it's not simply a random reward for voters.
No.
It's about promoting specific causes.
Exactly.
And this kind of raises a question.
Yeah.
Is this even legal?
Yeah.
Can you actually incentivize people to vote for certain causes, even if it's indirectly?
Well, that is the million-dollar question, literally.
Yeah.
Legal experts are weighing in right now, and there are some concerns that Musk's actions could potentially violate federal election laws, which prohibit paying people to vote.
Right.
And the focus on these specific issues aligned with his PAC and the targeting of voters in those swing states,
Yeah.
that just adds another layer of complexity to the whole situation.
It sounds like he's walking a tightrope.
He is.
What are the potential implications here beyond the legal questions?
Well, from an investment perspective, Musk's actions could introduce some political and regulatory risks for his companies, like Tesla and SpaceX.
So any controversy or legal trouble could spill over and impact investor confidence in those companies.
Exactly. And there are also personal security concerns for Musk to think about. He's a very high-profile figure.
Right.
And this move could potentially make him a target. These are all things that investors in Tesla and SpaceX should be aware of.
All right. So we've discussed Wall Street's election bets,
Yeah.
the potential impact on the tech sector,
Right.
and Elon Musk's gamble.
Uh-huh.
Let's pivot to another hot topic. The booming AI market. It seems like everybody's trying to get in on this AI action these days, but it makes you wonder what this surge in demand means for companies and investors.
Yeah, that's a great point. We're already seeing this reflected in the market with companies like Marvel Technology actually announcing price increases for their products
Wow.
due to that soaring demand in the AI and data center infrastructure space.
That's interesting. You always think technology is supposed to make things cheaper, not more expensive. So
Yeah.
why are prices going up?
Well, in this case, the demand is simply outpacing the supply. And when that happens, prices tend to go up. Marvel Technology is really important in this AI landscape because they play a crucial role in optical communication.
Okay.
You can think of it as like the backbone of the internet.
Yeah.
Marvel helps move information faster and more efficiently using light.
So they're basically saying because our technology is so essential for AI, we can charge a premium.
Essentially, yes. And this price hike for Marvel is being seen as an industry-wide trend. Analysts are saying that we could see similar price increases from other key players in the AI space, like NVIDIA, which is known for those powerful graphics processing units used in AI.
Right.
So it's something to watch.
So if you're invested in any AI-related companies, this is definitely something to keep an eye on.
For sure.
Because those price increases could affect their profitability, which could ultimately impact their stock price.
Definitely a factor to consider.
Okay, so we've covered a lot of ground today.
We have.
We started by unpacking Wall Street's election bets
Yep.
and the potential impact on different sectors.
Uh-huh.
Then we explored Elon Musk's very unique voter giveaway.
Right.
And finally, we delved into that booming AI market
It's been a lot.
and what it means for investors.
It really has. But hopefully you're feeling a little bit more informed and prepared to navigate all of these complex landscapes. Knowledge is power, especially in the fast-paced world of finance and technology.
That's so true. So as we wrap up this deep dive, here's a final question for all of you listening out there. Knowing what you know now, what's one action you might take? Would you revisit your investment strategy? Would you research a specific company or issue we talked about today? Or maybe just have a chat with somebody about how all of these things, politics, tech, and the market are all connected?
I think that's a great takeaway. Don't let this be the end of your exploration. Keep asking questions, stay curious, and keep learning.
Exactly. This is just a starting point.
It is.
And remember, we're here to help guide you along the way.
We are.
So keep those questions coming, keep those brains engaged, and until next time, happy investing.